Hello traders and welcome to another video review. Today is Wednesday, 2nd of June 2021. Let's take a look at the Forex calendar. Important news over the night were produced from Australia. Gross domestic product for the first quarter had been published 2:30, and the data beat the expectations 1.8% versus 1.5%, but it's still worse than 3.2% for the last quarter. During the London session, we got a bunch of data scheduled for release from Eurozone countries. Some of them have been published already, like retail sales from Germany that were catastrophically lower than the expectations, minus 5.5% versus minus 2.4%. The other data include a bunch of money supply, mortgage approvals and net lending to individuals data from the UK, scheduled for release at 9:30, and the speeches from Australian Deputy Governor Guy Debelle and Assistant Governor Michelle Ballack at 10 o'clock. Maybe they will shed a new light on the current Aussie situation. And during the New York session, we got the data from Canada, building permits scheduled for release 1:30, and Beige Book from Fed scheduled for release at 7 o'clock. In the meantime, we got some speeches again from the ECB Executive Board member Frank Elderson at 11:15, and the key event of today, the speech from the ECB President Christine Lagarde at 6:10. Two other speeches include the FOMC member Raphael Bostic and Charles Evans, scheduled at 7 p.m. as well. So, not too much data to be published. We got some speeches that might be kind of interesting to hear because they might trigger some moves on the euro market or in the dollar market. Gross domestic product from Australia completely I mean, this one was better than expected, but the retail sales from Germany completely different than expectations. So maybe we should take a look at the Australian dollar for the short update of the recent situation. Yes, what do we have here? Australian dollar is being analyzed by me every day now because there are some interesting things going on in Australia. Again, we are the market tried to break above the short-term trend line. Again, the price were capped and reversed. We are getting closer to yesterday's low, 7,732 pips. Right now it's 33, so it's only 4 pips before the yesterday low will be hit. And of course the RSI, the momentum is not helping the bulls. It's more like at the best on the neutral level, but is very keen to go lower towards 45 points, which means that the sentiment would change from the positive to negative, and the level of 7,680 will be hit sooner or later. So that's the first target for the bears. If we speak about the Australian dollar, let's take a look at spot gold market. We are keep trading inside of the channel, close to the upper channel boundary, above the 1,900 technical resistance. Yesterday the markets made a local high, $1,916 per ounce of gold on the spot market, of course, and it looks like it's a time for a pullback. Why? Because the market's conditions are clearly overbought, extremely overbought, over 76 points. So if we break below 1,900 again, then the next target is technical support at 1,865 and 1,848. Of course, the ultimate target for the gold is seen still between those two levels. Let me just move my zone there you go, between the levels of 1965, 1995. So this is the zone which will change the long-term outlook for the spot gold market if it is clearly violated, and the violation will be the breakout, the violation of the zone will be sustained. So there must be some sort of the, at least a daily candlestick close above $1,995. So that was the gold market. Let's take a look at the euro to the Japanese yen, because why not? Little update of this. On this part, we are clearly in the uptrend. We are clearly trending up. There is no doubt about it. We are still inside of this channel. The momentum is hovering around the 70 levels, up and down, which means that this market is trending. We need at least 1.81% correction, even if we include the last one, like that one. Let's say, okay, if we include this one, that's still 1.87. Yeah, we need at least 1.87, 1.81% correction before the overbalance will be present. So far, as you can see, next target 137.55. This is the next target for the euro to the Japanese yen. We are keep trading in the upper half of the channel, above the technical resistance 133.44, and the bulls are still pressing the market to keep trading higher. What is going on the Japanese yen and the British pound? Well, we almost hit our target, our next target, 161% at 156.28. So it's a very good news. The high was made at 156.05. So there is 23 pips. We were 23 pips away from this level. As long as the local technical support around 154.85 is not clearly violated, which is this level, we still can pop up and hit this target, 161% of the Fibonacci extension, or even 156.60, which is the technical resistance for this move. However, we are still trending higher. We are still in the up move. The biggest correction, let me just adjust the data, 2.95%. I guess this will be about right. So we need at least 3% of a down move in order to call a top on around this level, 156 and 60. So far it's looking good for the bulls. All of these channels are telling us that the bulls are not done with the up move, despite the fact that we are now around the overbought market conditions. There is still a room for the to climb higher. And of course, let's take a look at the US dollar to Japanese yen. What is going on here? Okay, so we have a breakout above this short-term trend line, which is why I will leave it for right now, because as you can see, we have a breakout and the market had tested this breakout already. Let me just zoom in for you guys to see what is going on more clearly. So we had a breakout, we have a test. This is a very interesting candle because just after the market broke above 109.79, the market rallied up and made a new high, 110.21, and then look at this. You have a big long upper shadow, looks like a kind of a pin bar and shooting star. I wish this is not a red body of the candle. Then we have a test of technical support 109.37 and a bounce, right? Test of the short-term trend had been done as well. So right now, maybe, just maybe, we can do some sort of the parallel channel here. But even we can see here that this is clearly not impulsive pattern, right? We go up, we go down, we go up, overlaps, we go up, overlaps. So this is some sort of the corrective move to the upside, corrective cycle. ABC, X, ABC. Maybe there's one more wave to the upside missing, and then the down move should resume. Of course, the targets we have on the chart, so please keep an eye for a breakout below 109.37. If we break below this level, then of course the road towards 108.41 on the US dollar to Japanese yen is open. The key technical resistance, the key target for everyone is 111.71, which is above the top of the wave 5, 111. So please keep an eye on this current development. So far, as I said, it looks very corrective in nature. It's too much overlapping itself, and it's moving inside of this channel. Momentum, well, momentum gets towards the 60 points here and then goes down, gets towards 60 points and goes down, gets towards 60 points and goes down towards 50. So it looks like everything you see here is corrective in nature. So please consider that while you will be trading the US dollar to the Japanese yen. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.